To the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 78 of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, Mr. AJ Brown. Good morning, AJ.
Hey, Sip, how you doing, man?
I'm doing well. Today is April 28th. I feel like we've got a lot going on in the market in terms of a lot of information hitting us, and the market is kind of dropping, going up, digesting, and so what do you think is the big takeaway this week? What should we be keeping an eye on?
Well, I mean, first of all, I think we got to be keeping an eye on what the Fed's going to do next week. They're going to meet in about 5 days from now, and they're going to talk about what their next move is. And of course, their rhetoric is just as powerful as their move. You know, if we take a look at what investors are thinking the move is going to be, they're almost unanimous that it's going to be a quarter-point rate hike. Yeah, the consumer won't stop, will they? I mean, if we take a look at the economic news, should we get right into it?
Well, yeah, I mean, today we had the PCE, and then I feel like that's tied in with all the earnings that's coming out, and it's earnings versus economic news battling each other. And so let's start with that.
Yeah, I mean, first of all, we had last week, if you remember, Chip, we had existing sales and we also had starts and permits. This week we had new home sales. New home sales were hotter than anybody expected. I think that homes and housing, of course, it's its own animal, and it's a big component of what happens here in the States. But the scoop is I think that it's a lagging. I've been really thinking a lot about lagging and leading indicators. I actually heard an interview with the Chicago Fed president, and he also got me thinking. He was talking lagging versus leading indicators and making sure that the Fed is making decisions based on leading, not lagging indicators, because a lot has been changing. So if you take moving averages over the last year, especially simple moving averages, which means every data point is weighed the same versus like an exponential moving average where the more recent data points have some more weighting. And I don't mean W-A-I-T-I-N-G, I mean W-E-I-G-H-T-I-N-G. They contribute more into the economic news when you use an exponential moving average. So I think a lot of these economic reports use simple moving averages. And so instead of looking back over the past year, I think that, and we'll find out next week when the Fed meets again, but I think they have to start looking at what's in the present, what's in the more recent present, and what's coming up with the future. And so everything's hot, man. New home sales is hot. When we take a look at durable goods orders, durable goods way hotter than expected. But then when you pull out automobiles, that's what inflation means right here. When you pull out automobiles, durable goods orders was just a little bit above being flat. So that means that car sales are hot right now. And I think that has a lot to do with still the supply chain. Because if you remember, Sip, there were some semiconductor issues and these cars were not being built, and it caused a big bubble in the used car industry because new cars weren't being built. So I think a lot of new cars are being bought now just because the factories are back up and running. Chips are being developed. I heard President Biden speaking to folks about his relaunch of his campaign for his next term, and he was speaking to some union workers, and I believe he was in Pennsylvania, but don't quote me on that. But he was talking about how each one of these cars that we buy these days have at least 3,000 of these semiconductors that were backed up in the supply chain. So people are buying cars, but it doesn't look like they're buying much else. But we actually expected them, if you look over here at the consensus number, we expected them to buy less of stuff and they actually bought a little bit more of stuff, but it's still around that zero number. Same with this other one, core capital goods. These are the things that we really need. It's not like luxury items. They actually expected us this month to buy a little bit more, and we actually bought a little bit less, but these numbers are all around zero. The big number that was unexpected is the amount of cars that were purchased. So that's interesting. So cars and houses are doing hot, but then when you look at the ADP numbers for quarter one, remember they go back every month and they revise these numbers. So the advanced is like the first snapshot of what happened in quarter one this year. Then they'll come back next month and they'll give us a revised number. They call that one preliminary. And then a month after that, they're going to give us the final numbers for quarter one. But you'll notice here, man, quarter over quarter, they were expecting 2% growth. And in reality, we came up with 1.1% growth. And just if you look back at the numbers in the previous quarters, this number keeps going down and down and down. It's downtrending pretty strongly, P numbers. So a lot of the Fed tactics are working when it comes to GDP numbers, which I would say GDP numbers are probably more of a leading or current indicator versus home sales and automobile sales, which is still catching up with the supply chain. And then we look at these PCE numbers. Here's where I really want to throw people's focus. Again, I don't know how valuable it is looking over the past year, because a lot has happened in that past year. So all of these year-over-year numbers, I don't think are as important as the month-over-month numbers. And so, for instance, personal income is up more than expected. Personal consumer expenditures is flat, and that's what was expected. But then you pull in the personal consumption expenditures and core personal consumption expenditures, price indexes, and you can see that those things are still rising. So it looks like that the GDP is really coming down quickly, but it's still not at zero. So we're not in recessionary territory, but we are slowing down quite quickly. It looks like the PCE numbers are still above zero, and that's going to be freaking some of our Fed deciders out next week. And it looks like wages are still strong. Now, I don't think wages, I don't think the Fed's going to pay as much attention to wages as far as expenses. I think that wages will also be lagging. So I think thinking about both as an investor and if I was in the place of the Fed, thinking about what is a leading versus a lagging indicator and making sure I'm acting accordingly. Don't get confused. Don't get excited about a lagging indicator and think it's going to continue leading and vice versa.
Yeah, it seems like there's a lot to digest there, but something that we talked about, previous shows is if the market is expecting the quarter point hike, right, and we get the quarter point hike, that's probably positive for the market, right, because it's not something that's out of left field. And so, what was the number? Some you said like 92% their confidence of a quarter point.
It's 87.7 as of right now. Yesterday, if you go about a day ago, it was 83.9. So, and then a week ago is 89. So it's basically close to somewhere between 85 to 90% confidence that this is what it's going to be next week.
Yeah, and it's very interesting to see the consumer staying this resilient, right? I mean,
Yeah. When will these consumers peter out? I mean, that's the big deal, is that people just stop. And it's interesting because you and I like to look at this Bureau of Economic Analysis report where we're looking at savings and we're looking at spending, at incomes, right? So we can see that somehow spending looks like it's moderated. That's these light blue or cyan colored bars. Wages continue to grow. And down here, you've got savings. Savings, if you remember, you and I were raising alarm bells about 4 or 5 months ago, but savings has recovered quite nicely. So where are they getting this money? It's such perplexing, but people, really at some point, I feel like there's going to be a cliff and people are just going to stop spending discretionary funds like they are right now. But I don't know when that's going to be.
Yeah, well, we'll keep an eye on it. It feels like the market is reacting positively from today's news. It looks like we're up
Mm-hmm.
about 11 on the S&P, and that's following a pretty big move yesterday, led by some of the
Mm-hmm.
tech earnings.
Mm-hmm.
I mean, what are you seeing on the technicals on the S&P side?
Yeah. So here, let's put our ruler on. So we like to compare moves to the previous moves. So on March 13th over here, we had a range expansion move start, and it ended on April 18th. So during that whole time, we had movement up. On April 18th, we actually got a confirmation that we would start coming down. And if you take a look at the indicator that we use just a simple 3 and 5 day exponential moving average crossing. As of yesterday, we closed and we did not yet have a crossing telling us that this low over here on April 26th was our low. Yeah, that's right. April 26th was our low. But as of today, with today's price action, it looks like we will get confirmation at the end of the day that April 26th was our low. So let's assume that it was our low and that this trend line is no longer yellow, it's white, which means it's been solidified in concrete. So if we compare this current move that we think is going to be done as of the end of day today to our previous move, what we'll do is we'll use this little line right here, this zero line, as our mover, as our marker. I'll even put it in yellow so we can see it even better. What you're seeing is we pulled back, but we didn't pull back ideally on a nice uptrend. When we have pullbacks, in order to reset the move, to get investors excited about the next move moving up, we would actually pull back somewhere into this center zone that I marked it with these yellow squares. Instead, looks like we stopped short of that center zone, which usually means that if we continue to move up now, if we start to change direction and move up again, that this might be short-lived. So I'm not so excited. Like a lot of people, SIP, are getting behind this uptrend. I'm the opposite. I'm seeing weakness in this uptrend. I'm seeing a lot of excitement by investors that's not backed by true fundamentals, right? And so I feel like this move up that we're seeing is going to be short-lived. And if we go back a little bit, and I hate to be the person who's telling you guys opposite, but if we go back a little bit and I take a look,
What's that time frame that you're looking at?
1 year. This is 1 year.
Okay.
And let me get rid of some of this noise so that you can see this chart a little bit better. That's not how you do it. You do it with this button. There we go. We're getting to that point where we're hitting some overhead resistance we've tested a bunch of times over the last year. So I'm not too excited that this uptrend will continue past this level of overhead resistance that we're up against around 4,200. I think that we're going to hit some static and we're going to see another temporary move down. Now, what's good about this is the folks who are part of my trading circle, we actually love these sideways choppy markets, because these sideways choppy markets allow us to use options to what I feel like is their highest potential, which is to create kind of a income stream off of selling premium. So I love this, but for those people who are like trend followers, who are believing with all of their heart and their emotions and not paying attention to the data, I would be very careful about buying into this uptrend right now.
And that's, we'll cover a few opportunities throughout the rest of the show in regards to how to take advantage of a potential downturn, maybe some more sideways action, because here at Trading Trainer, we're specializing and we're very interested in options trading. And so if you haven't traded options, if you're new to trading options, as AJ is showing you on the screen, happy birthday, options. You're turning 50.
Yeah.
So options have been around pretty much since the day you were born.
I was gonna say, I turn 50 next month on May 20th, and so, yes, it was 1973 when call options were introduced. I think it was, I have to go back and refresh my history, but I think it was either 77 or 79. It might have been even 81 that put options were introduced into the market. But yeah, options trading began with some call options in 1973, and so yeah, it's not a product that's going away. And I really feel like folks need to embrace it. One of the things I kept hearing at the Traders Expo, which I just got back from in Las Vegas, there were a lot of different types of traders, commodity traders, stock traders, exchange, foreign exchange currency traders, forex traders, and a lot of them still, these people who consider themselves professional traders, still look at things like options and futures as black magic. And I mean, they've been around for over a lifetime now. So it's time to embrace them and embrace the actual risk mitigations that they provide us. Everybody thinks that trading options is more risky. I'm here to prove that if you're on the right side of the equation, it actually reduces the amount of risk that you see.
That's right. And proof on the live show with some of the examples that we go over, but also just with the legacy of Trading Trainer itself, which I believe is turning 20, if not,
20.
yep, 20 years of educating people of all ages, right? Down to the
Yep.
teens, up to, the super seniors out there.
People don't understand that this millennial population is bigger than the boomer population, and these millennials have a whole different outlook on things.
And access to their handheld devices, which allows them to easily and quickly place options trades, which make the ability to spread out your investing techniques, right? Options
Yeah.
are a great way to do that. And so, while we're on the topic, let's go ahead and invite everybody. Let's just give a round of applause for options turning 50. Congratulations,
Mhm.
options. But with that, uh, AJ's got an amazing workshop that he puts on where he goes into these strategies. He gives you the insights over 20 years of trading options. And so if you haven't checked it out, we're going to go ahead and throw the link into the chat. It's completely free, no obligation. You'll enjoy the content there. Watch it today, watch it tomorrow, check it out later, save it for another day. But the link is there. Also, because we are streaming live and AJ's got the charts up, we're going to go ahead and give everybody an opportunity to ask him some questions. So if you're interested in some specific names or you want to have AJ's perspective on some option strategies, feel free to throw them into the chat and we'll see if we can get to it. Otherwise, a little bit later on, we've got AJ's pick of the week. We got our speed round. We've got some hot topics, but we're going to take a short break, give everybody a chance to go sign up for that webinar, and we'll be back in a few moments.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
And so seeing that clip, it reminded me of the conversation we had not too long ago with the Fisker. Did you end up taking a look at the Fiskers?
Well, I'm following. I'm so enthralled with this particular car. I just remember about 20 years ago, Fisker was making one of these exotics, like that was in competition with McLaren and in competition with Lamborghini and Ferrari. And he since has changed his focus, and he's gotten into the electric car world, and he wants to take a huge chunk out of Tesla. And I don't know how far it's going to go, but his goal, this is Heinrich Fisker, is to get all the certifications. And he actually just surpassed and beat a lot of the EPA certifications. This Fisker Ocean is going to have one of the longest run times on a battery. I think it's 440 miles or something, to rival the whole Tesla. And it's supposed to come in at a really good price compared to these prices of the Tesla. So I'm excited. They haven't started production. They have a plant that they're outfitting in Ohio, but they also have a plant that they've outfitted and they've got up and running in Austria. They just started production in Austria, and they're delivering cars. They've met all the certifications. They've opened up a couple of showrooms in Europe. I think one's in Austria and one is in
My neck of the woods, right?
maybe Poland.
Well, no, Los Angeles, right? Isn't there one?
Oh, there's going to be one in the Grove, which is in Los Angeles. It's still not open, and I think that's because they're waiting for the U.S. certifications. Anyway, Liza and I have our deposit that we put in on this car. It's just $250, but we want to be in on the ground level with this. So
That's
fingers
exciting.
crossed.
That's exciting. We'll keep checking in, and when the Fisker comes around, we'll
It
have
has
to.
a button that you push, and it drops all the windows, and it opens the sunroof all at once. It's called the California mode.
All right, folks. You get ready. We're gonna have some new commercials of AJ cruising in the Fisker.
Yeah.
All right. So let's go ahead and jump into our hot topic, or no, our soft news, which is the debt limit. So this is some political chatter. Do you think it's affecting anything that's taking place in the market, or is the two are separated?
Not yet, but it will if it comes to a hilt. I think right now people are hoping that, and when I say people, I mean investors, they're hoping that this is just noise in the background. Here, we try not to get too involved in these discussions around fiscal policy. We rather focus our discussions on monetary policy. But man, if this is allowed to escalate and bring us right to that deadline where the U.S. starts to default on its debt, this will affect investors. This will affect your portfolios, and we do have to make sure that we are hedged accordingly. So something for you guys to just have in the back of your mind. I think that as we get closer through the month of May, we need to put some hedges in our portfolio.
And is any of the currency chatter from Russia and like China, Saudi Arabia valuing things outside of
Brazil,
the dollar, is that affecting some of the debt?
I think it's a majority of it right now is rhetoric. The countries that are getting involved, that are shedding, they're basically switching currencies of focus from the US dollar to either the ruble or the more likely the Chinese yuan, are countries that have such small GDPs that it's more just headline building than it is actual, like, this is going to disturb the world market. But combined with a default on US debt, and that momentum can soon build from these small countries like Argentina and Brazil and South Africa to bigger countries. So, they're playing with fire, our politicians, and I think that it's irresponsible, but that's just my 2 cents.
Yeah, I feel like now in the year 2023, we are more globalized than ever. And we, as the United States, are kind of losing our edge because a lot of the other countries, they all have access to the internet and technology and things like that. And so we really got to get our act together internally if we're going to continue to be the world leader. At least that's my perspective.
I mean, you look through history and every empire falls. So
it's probably going to start with the next presidential race where we have the two oldest guys in history trying to lead the world.
I know somebody that's younger and somebody with charisma that can actually motivate and get everybody focused would be welcome. But I don't know. No, I think you got to be really. I was talking to my wife about this morning. When you take on that, you have to have something wrong in the head. I know I would never want to run for public office because, I mean, look at what's happening just in some of these headlines around some of these Supreme Court justices. I mean, you take on this job as a civil servant and then power goes to your head. And so I just don't know who would want that job, right? I'd rather be, you could even make an argument that some of these CEOs of these billion-dollar companies have more clout than the president of the United States. So you got to have a screw loose to really want to be the president of this country, in my opinion.
I'd say a guy like Jamie Dimon at Chase has a lot of clout, right? A lot of clout to be able to, make an impact.
Move those things, yeah.
But this is not a political show. This is a trading show where we just look at the headlines and then we see if it'll impact any opportunity.
Accordingly. Correct.
Right. And so, with that being said, let's dig into some opportunities. Let's take these 20 years, these 50 years of options history, and let's apply them to something that we could act on this week, maybe next week, if the setup is correct. And so let's just get right into your pick of the week. And this is a name everyone should be familiar with: the semiconductor creator, developer, manufacturer, Intel, ticker symbol INTC. What are you seeing in Intel?
Well, first of all, I want to, last earnings season, we talked a lot about earnings plays. And we talked about how we could take advantage of the implied volatility crushes that happen right after earnings is released. And I kind of feel bad because I haven't been talking about that, but I've been trading it. Setting up for Intel and their earnings release over the last couple of days has been quite a profit maker for us. But now that Intel has released its earnings and as of today, they're getting digested. We're looking for our premium position. And so we're going to, let's go ahead and put in one of my favorite indicators. So if you guys don't have this already, pull in a MACD indicator into your charting softwares and then switch out the arrangements. Now, these are not just random numbers I'm about to give you. This is, if you go and talk to the MACD creator and his son, they use a couple of different settings as well. This is called the fast MACD. And so I wish I could take credit for it, but I can't. It's them. But the two moving averages is a 6 and a 19. And that's in contrast to the default setting, the regular MACD, which is a 12 and a 26. This is a 6 and a 19. And then the MACD average line or the divergence line is a 3 instead of a 6. So there's a 3 instead of a 9. I think the default one is 12, 26, 9. So if you want to trade some of these premium positions the way that we do on the time frame that we do, the fast MACD is a really great indicator. So 619.3 based on exponential moving averages. And so, I'm waiting for another crossing of the red arrow like we got back here. So just a few days ago, let me go ahead and pull up my arrow here so I can find out what date specifically. On April 6th, we got a signal that a top had been found, but I have to be honest, getting that indicator, we never got any volume validation to that move until basically leading up to earnings. And so, folks, you've got to not just trade a strategy because it's what you know, right? what you want to do is you want to take advantage of the patterns that are building on everything, not just price. So when earnings is approaching, we're not thinking premium selling anymore, right? If anything, we're either figuring out if we can weather a premium selling trade or we're cashing out of a premium selling trade, because that's not the pattern that's building. The pattern that's building going into earnings is usually a volatility play. So you trade that differently, and we've talked about that. But now that we're past earnings, we're back into thinking about this premium trade. And so you'll notice we never got the volume follow through on that signal. And then the signal is setting up to reverse today because of earnings. But it looks like very quickly that signal is going to get reissued. So when that signal gets reissued, which means we have a MACD crossing down below its MACD average on this fast MACD indicator, look for the volume validation. That's what I'm going to be doing. And that's going to be our signal to buy a deep in the money, far out in time put option. That's going to be our initial covering position that will profit as the stock goes down. So in other words, we're waiting for validation that a top reversal has been found. We're going to buy a back month deep in the money put that will profit as the underlying symbol goes down. And then you're just going to wait. You're going to check in every evening on that symbol. And if that symbol bottom reversal before it gets about 40% or more out of the channel. So in my book here, and everybody interprets the channel differently, but I'm talking probably around $24.50. If it starts to reverse back up before it goes below $24.50, that's the perfect opportunity to set up a premium trade. So we're going to sell a near term at the money put. And at the same time, we're going to buy an out of the money 3 to 6 month out expiration call. That'll bracket price action in between those two strikes. And it'll make a risk-free, basically income generating trade for us. Now, people say, well, what if it does go lower than $24.50 before it bottoms out? In that case, I'm just going to wind up selling that back month put and taking my profits in. It'll be a nice gain taking that profit and run.
And we're looking at a few week timeline. Is that kind of what you would have on your horizon?
Yeah, I think that first we're going to get into that top position. So I have no doubt that we're going to get a signal that includes the fast MACD crossing, the volume validation, price action validation, and then the actual trade day. I think that's coming next week. It looks like it's setting up for next week. We just have to wait and be patient, not do the trade until we see the whites of their eyes. And then it's probably about a 2 or 3 week trade. And it totally can be one of these trades that you do these adjustments on. Basically, you put the trade zone in by selling premium, buying protection. You allow that to wear out with time. Then you're going to do it again. Do it again. Each time you do it, you pull income out of this trade. Do it again. I bet you we can, looking at Intel's history, if I go back again to about a year, I mean, I wouldn't doubt that this could go on for 5 or 6 months, just making a nice steady stream of monthly income off of this trade. So that's what I'm looking to do, and that's what I hope people set up. You set this thing up correctly in the next week, and you'll be pulling monthly income out of it for the next 5 or 6 months. Probably give you a nice holiday season paycheck.
Yeah, and this is definitely one of those names. I mean, at least recently it looks a little bit more boring than maybe last year where it looks like it was falling. But boring names are great for a lot of these options premium strategies that you and the team are always, reviewing every week, and even some of the names that we're just bringing up on the show. So loving the Intel setup, nice little price point in that $20 range. So And
$30, yeah.
we didn't even need to go into the liquidity because I'm pretty confident that Intel is probably one of the most liquid options
Truth.
symbols in the market, right? So
Yeah.
that's Intel. Intel
I
is
think that this
AJ's.
is a no-brainer. This is a no-brainer, and I like to feature no-brainers. I think this is a no-brainer, and I always love when I get messages where somebody says, hey, I did the trade that you did, and it lasted so long, and I was able to take the profits and buy my wife her dream car or something like that. So follow this one, guys.
And maybe not a car, but maybe your, dream dinner for the week, right? We're not claiming that you're going to make exorbitant amount of money, but there are winners, and some of the winners are larger than normal, and that's what we're trying to highlight on the show. So that's Intel for you guys. Moving on, we've got our speed round. So throughout the week, we've got some members, some followers that have brought up some tickers, and this is an opportunity to quickly browse them, see if there's some opportunities, and get AJ's perspective on some names. All right, so we're going to head on over to the middle of America, and this is Amy in Omaha, Nebraska, interested in a home builder, Pulte Group, ticker symbol PHM, right? That's the home builder?
Mm-hmm.
Pulte.
So we featured this. I think we featured this when we first started this video show, this podcast, about a year ago. Because as you can see, as I look about a year back, Pulte was boring. But as of 2022, Pulte has broken out of that sideways channel and is starting to go up. And as we were just mentioning about the economic news, new home sales is great. I mean, Pulte Homes is building stuff. And I think that a lot of these, I wouldn't want to call, they're not a high-end custom builder. They're kind of a cookie cutter builder. And I think that they're filling a gap of much needed housing inventory. And so I think that this is a solid company. So I guess what I would think about here, this is for Amy in Omaha, Nebraska. What is it? I don't think that Pulte Home is going to be a good premium trade anymore like it was about 6 or 7 months ago. I think Pulte Homes is one of those ones that you may consider having in your portfolio for a certain amount of time. So what I would consider doing, because I like to use options, is locking in a purchase price. So when we sell an option, we are basically on being the seller of the option, we're taking on the obligation to either buy. I apologize. I don't even know where my phone is.
Or sell, right? Buy or sell.
True. So the option, depending on whether it's a call or a put, would allow us to either buy or sell. And in fact, it's not allow us, it's the obligation we're taking on by selling our option. So if we sell a put option, we are going to basically agree to buy somebody's stock at the price of the option, at the strike price of the option, and it's through the expiration date. And so this is neat, because if you think about it, how are the different ways we could buy stock? Well, we could go to the market and we can say we want to buy it at the market price, which means you're going to get your stock shares and you're going to pay whatever the sellers are selling it for. So whatever their asking price is, you're going to say, I'm willing to pay that. The other way you could do it is you can do a limit order. So you can say, I'll buy your stock, but I want to buy at this price. And so you may or may not get that stock share at that price. Those are the two ways that you can traditionally buy stock. But what if we used an option? What if we sold this put option? So let's look at that really quick. So what about an option that expires? Well, there's one that's going to expire. Let me come over here to the currents. There's one going to expire on May 19th, right? And let's see, Pulte is currently right this minute trading at $66.78. What if I say I'm only willing to pay $65 a share? So I could sell this agreement, this put option agreement. These put options, I could easily sell it for about 87.5 cents per share. Options are sold in lots of 100. They're called contracts. So $87.50. So somebody's going to pay me $87.50. And in return, I've locked in the buying price of this stock at $65. So just like a limit buy order where I say I'm willing to pay $65, I've basically done that here. The only difference is when I do a limit buy order and I say $65, the order may or may not fill. When I use this method called selling a cash secured or naked put, same thing. The order may or may not fill, but whether it fills or not, I'm going to get $87.50 per contract that I sell. So it's kind of a neat way of buying stock at the price that you're willing to pay, and either way, getting some money back. So that's what I would do. I would determine, because this might be a stock that you might want to have in your portfolio for the next foreseeable amount of time. And instead of just buying it outright at the market or using a limit order where you may or may not get filled, let's sell a cash secured put, make some instant dividend, make some money, what's called making the premium off of that option. And then you may or may not get filled at that price, but at least you made some money off of selling that option. It's a little known strategy that folks don't take advantage of enough.
Yeah, I'm very interested in the strength of the new home sales with these fast rising interest rates. I mean, it's just very, very surprising to me. So, thank you for your analysis of Pulte Homes. Thank you, Amy, for bringing that one to our attention. Moving on to another notable name that most of us day-to-day consumers are very aware of is Amazon, ticker symbol AMZN. And this is Sarah from Richmond, British Columbia. Amazon, which I believe released earnings this week.
Mm-hmm. Yeah, and it doesn't look like it phased investors at all. Let's zoom in a little bit. So we're trading this is a little bit of an expensive underlying stock, which means selling premium against it means you're going to have a bigger portfolio. So hopefully you do. I would consider this to be a premium trade. That means that I want to set up some sort of initial covering position, and then I want to sell premium against it and create that income. And so the initial covering position in this case looks like it's going to have to be a back month, deep in the money put option. And here's what you want to do. A lot of people don't understand this little nuance, but options have different behaviors. So a lot of people think that all call options behave the same way and all put options behave the same way. And it turns out that's the farthest thing from the truth. Depending on the strike price and the expiration date, you can have a call option that behaves completely different from another call option. And so what we want to do for our initial covering position is we want to make sure that, first of all, this thing is not going to expire anytime soon. So I would go out at least 8 months, and I'm thinking maybe go out even a little further and use the January 2024 leap. And then you want to go so deep in the money that this option is going to behave like the underlying symbol. Only because we're talking about using a put option, it'll behave like dollar for dollar, but it'll go in the opposite direction. So if the stock goes down $1, the put option will go up $1. And the way you do that is you minimize this thing right here. You can see I have added a column to my option chain called the extrinsic value column. you minimize the amount of extrinsic value that is in the option price. So the deeper you go in the money, and when we're talking about put option, that means that the strike price is going higher. You'll notice that the extrinsic value, go ahead and get, there's so many options on Amazon. Here we go. Now we're getting deep. You can see that, for instance, in this $34 option, the extrinsic value is like only 30 cents. So it's like less than what, 1% or something like that of the price. I would find one that's less than, right at the edge of less than 5% of the price. So you could just take your calculator. Let me see. I'm pulling up my calculator right now. I wasn't sure which screen it would come on. That's why I looked behind my shoulder. Let's take a look right here, Sip, at this guy right here, this $135 strike price option. You can see the extrinsic value is about 53 cents. It's changing as the market's open, but let's just use 53 cents. And it's about a $30 option. So 53 divided by 30. So this is still, it's less than 2%. This is about 1.7, 1.8%. So maybe go higher and higher. Let's look at this one right here, $1.81.5. You can see it's changing. Amazon's price is very volatile today. Let's see if I can catch it here. $1.76 and divide that by $26.22.5. So this one's about 6.7%. So like I said, let's try to target less than 5%, but not too much less. So I think you're going to be going with this $132.50 option. So instead of having to worry about a cost basis or a margin requirement of $105, which is the price of Amazon, instead we're going to use a little bit of leverage, and we're going to worry about $27, $28 per share. So I'm going to be dealing with this option, the $132.50, and that will allow me to then, when I find bottoms to this, sell premium and create income. So it's all about picking the right option in order to cover future trades. And that's what you're going to be doing right now. You want to wait until you get a strong signal that Amazon is done moving up. In other words, you're going to find a signal for a top reversal, that a top reversal has been found. Once you see that signal, you're going to get into your initial covering position. And I recommend deep in the money, far out in time, and go deep enough. Use that little trick I showed you of extrinsic to price and find an option that's just around 5% or less of extrinsic. And that's the one you're going to go with.
Yeah, and it's crazy to think that it's still expensive, the options in the stock, even with the reverse stock split, right? Like if for a while there, Amazon was trading at like $1,200 a share, and now at $100 some odd dollars, it's still expensive, but not as expensive. So definitely need to have the portfolio to get into this name. So hope everything's going well on your end, Sarah, if you're looking at Amazon. So that's good to see. So thank you once again for bringing that up. Moving on to our next name. This is back to the middle of America, maybe a little bit closer to the east, but this is Adam in Memphis, Tennessee, interested in tech name PayPal, ticker symbol PYPL.
I hear Memphis and I think about Elvis.
I hear Memphis and I think about ribs.
Oh, okay. Yeah,
Memphis
BBQ,
ribs.
right?
Yeah.
Oh, look at PayPal. Okay. So PayPal is a converging or consolidating pattern around the $75 mark. Earnings is coming up. Okay. I said I felt bad not talking about earnings plays. Maybe we can do an earnings trade on PayPal. So if you guys had been tuning into our show for a while, every time earnings for a particular symbol comes around, we try to look at how we can take advantage of either the implied volatility rush or crush. What that means is that as earnings approaches, investors get a little bit antsy that their purchase on the stock, or whether they've gone long or short on the stock, that might get disturbed during earnings season. And so this is where it comes to being aware of the pattern that the market is throwing to you, the pattern that you can count on. So when it comes to earnings season, I have to tell you, speculators out there, that unless you have insider information, you can't, it's not even very difficult. It's a crapshoot on whether you guess whether price will go up, down, or just stay where it is. That becomes a guessing game, and I don't trade guessing games. So I try to look and I try to say, what is a variable movement that is predictable? And in this case, the prediction is fear, right? As earnings approaches, fear comes into investors that have this particular stock, whether they're long or short, that something might happen. And so how do they respond to that fear? Well, they buy options because they know that options will hedge against that risk. Options will, if they're long, they'll buy some put options. If they're short, they'll buy some call options. And so if the position goes against them, at least they're hedged, right? What that does is it makes option prices go up in price. And if you reverse engineer an options price, you can get to implied volatility. And so the implied volatility goes up. That means investors believe that this stock could go wild at earnings. So that means that the price gets very high, especially for the options that are like 1 week out. And so what should we do when the price of something is high? We should sell, right? Buy low, sell high. So whenever something's high, we should sell. So we want to sell those very volatile front month options, right? And then after earnings, we know that, again, predictable pattern, investors get calm again. And so investors then start getting rid of those options, and the implied volatility options drop. That's when we want to go ahead and then sell back that front month option. And in order to sell, or I should say buy back, we sold it when the price was high. When the price drops, we're going to buy it back. So in order to do that selling and then buying back, we need to have a covering position. And so that was a short story made long, as I'm so good at doing. We're going to do a calendar spread on this. And we're going to use an option that's probably 3 to 6 months out for our back month option. We're going to use a 1 week to 2 week out option for our front month option. We're probably going to use the $75 strike price. We're not going to place this trade until, let's see, earnings is on May 8th after the market open. So I'm going to be setting my calendar on May 8th. And during the May 8th trading day is when I'm going to place this thing, when implied volatility is at its highest. And then on May 9th, the day after earnings is released, after the calm, and the calm will happen in the first hour of trading, I'll go ahead and liquidate this calendar spread on the next day and take advantage of that implied volatility crush. So those trades I do all the time during earnings season. Those are, and the key takeaway is trade the predictable pattern. Don't get into the game of guessing.
And just to confirm, we're not guessing whether the stock's going to go up or down. We're just taking a bet that something's going to happen. There's going to be movement, right?
Not even that, Sip. We're basing our whole trade on the fact that people will prepare for something to happen. See, when they prepare for something to happen, they drive the prices of options up. So that's when we're going to sell. And then once that event happens, no matter what happens, it doesn't matter the outcome. What happens is once the outcome has happened, once the earnings has been released, then people breathe a sigh of relief. They start liquidating those options. The overall price of options fall, and that's when we get out of the calendar spread. The calendar spread will go up in price when those options, when the implied volatility goes down. So that's the type of trade that we want to do here.
Well, I'm glad we were able to find a name. So thank you, Adam. I'm glad we were able to find a name where we could kind of dig into an earnings play, because it is, we do have probably another 2 or 3 weeks of earnings, and it seems like they're having an impact on the market. I mean, I know yesterday's Meta earnings, they must be doing well because they're laying everybody else off, right? And
Hmm.
Amazon's doing a bunch of layoffs. So interesting verbiage coming out, but it's nice to have a play to take advantage of it when there is the movement, but also when
Have
there's the consolidation.
Have you noticed that a lot of these tech companies, they're letting go of a lot of people, but then they've got new job openings hiring for different skill sets, namely AI prompter. So I've noticed like Google has a whole bunch. I was looking on the job boards at Google, and Google's got a whole bunch of positions that have opened for people who are becoming experts at how to prompt prompt the different AI tools. So that's interesting, right?
Yeah, and even yesterday's Meta came out with the earnings, but so did Microsoft. And in the follow-up discussions, AI is the chatter, and sounds like investors like that because it's got some opportunity. And we've been messing a little bit with the AI, and we see the opportunity. So
Yeah.
now's the time, right? Now is the time. If you look at history, now is the time to be getting involved.
I got to tell you, this is a pet peeve of mine, but I'm also hearing all of these news headlines about how school teachers are getting upset that students are learning, they're using the AI to do their school assignments. But I have to say, learning how to use the AI and how to prompt the AI properly is a skill set that is going to be incredibly marketable in the future. So you shouldn't be telling these school children's not to use AI. You should be instead incenting them and getting them to be very good at it, right? Because I'll be honest, that's going to pay them big times down the line. So I love our schools, I love our teachers, but I sometimes get upset when they're curbing rather than promoting the skills that people are going to need in the future.
Yeah, there's actually a funny South Park episode that just came out about ChatGPT, where like Carmen and the crew figure out how to use it to do their homework, and then other people find out, and they're like, "Oh, don't tell anybody, because this is our little secret," and they like expose the web that can occur in like a grade school if kids start using ChatGPT and things like that. But also this week, I heard that there's a new tool that's essentially analyzing potential moves off of headlines, potential stack moves using headline. And so I think on our end, we'll start to organize some of these tools, and maybe on the show we can maybe share some of the cool AI tools that we see, and encourage people to utilize them to enhance their lives, to maybe help them do a little bit more research, organize some things. Tons of great uses. Amazing time that we're in. Um, and we'll keep the AI chatter for another episode.
Yeah.
But that we're getting close to our time limit here for the day. Lots of great stuff, lots of activity in the market. We're heading into summer. We're closing out the end of April. Any final words? Anything we should be looking into heading into next week?
I think that we're going to be paying attention to earnings, and we're going to be paying attention to the results of the Fed Open Market Committee, not just the rate hike, which we all expect is going to be a quarter point. We don't expect anything surprising, but let's pay attention to the rhetoric, whatever statements come out alongside that.
All right. And real quick before we head out, we want to give everybody a chance to grab some of AJ's tools. We're gonna give you access to his stash of white papers, short courses, trading tools, indicators, videos, all that jazz. We've just thrown the link to that in the chat, so feel free to go ahead and check that out. If you've enjoyed the broadcast, hit that like, hit that subscribe, hit that follow button. If you have any questions, feel free to leave it in the comments, send us a DM, and someone will get back to you as soon as they can. Otherwise, we appreciate your time. AJ, I appreciate your time for today. That's all I got.
That's all I got. Thanks, everybody. Make sure you like and subscribe to our show, and please tell your friends about this show. because I think everybody can get some value out of some of the tips that we give.
Awesome. All right, everyone. Have a great rest of your weekend.
Bye.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.